FIIs and TIs are buying Bank of Maharashtra, and the real question is not should I buy. The real question is why is large institutional capital increasing ownership right now, and what does that tell us about the banking cycle? Is this simply a short-term flow event, or is this early stage of re-rating? And here is a key question: what specific numbers are convincing institutions that Bank of Maharashtra is becoming stronger, safer, and investable? Let's take a top down approach. First, the banking sector and the Bank of Maharashtra. Banking stocks typically perform best when the three conditions align. First, credit demand is healthy, meaning household and businesses are borrowing with confidence. Second, asset quality is very stable, meaning bad loans are not rising. Third, funding conditions are manageable, meaning bank can raise deposit without paying sharply higher rates. It is very important for the bank. Credit growth means the banking system is giving more loans. Asset quality means how well borrowers are repaying loans. Funding conditions means how easily bank can raise deposit, and those deposit cost what percentage for the bank. Banking is cycle sensitive, so timing matters very much. You usually avoid or reduce exposure to banking stocks when bad loans start rising, when deposit competition pushes deposit rate up too fast and squeezing margin for the bank, or when the economy slows sharply and credit stress increases. Now, why does this matter for FIs and DIs? Institutions typically allocate capital when the sector environment is very supportive and specific bank showing improvement in fundamentals with declining risk. That combination increases the probability of re-rating. A re-rating simply means the market start valuing stocks more highly because it has greater confidence in earning and risk control for the future. Now let's focus on the Bank of Maharashtra. The first major trigger was structural, the government's stake sale. In December 2025, the government announced an offer for sale, or OFS, in the Bank of Maharashtra for up to 6%. That is 5% base plus 1% green shoe with a floor price of 54 and 10% reserve for retail investors. OFS means the government sold part of its share to the public, which increased the number of shares available for trading. This matters because large funds need scalability, meaning they must be able to buy or sell a meaningful position without causing large price swing. It is very impossible or difficult when the public holding or the amount of free float is not available in the market. After this event, promoter holding declined from approx 79.6% to approx 73.6%. Promoter holding means the percentage held by the controlling owner. Here is the government. This increase the free float. Free float means the share available for the public to buy and sell. Ownership data confirms that institution accumulated and not just traded. In December 2025 quarter, FIs increased from 2.3% to 4.92%, and mutual fund holding increased from 1.17% to 5.32%. FIs are large foreign investors, DIs are large domestic investors such as mutual fund and insurance companies. Now the fundamentals, because institutions do not accumulate a bank stocks or any other stock unless operating numbers support the thesis. For the quarter ended 31st December 2025, Bank of Maharashtra reported total business of 5,95,163 crore, up 17.24% year on year. That is a huge growth. Total business means deposit minus loan. Deposit were 3,21,661 crores, up 15.29%. Global advances were 2,73,502 crores, up 19.62%. Advances means loan given by the bank. The composition of growth also matters. RAM business, retail, agriculture, and MSME grew 20.26%, and retail advances, retail loans grew 30.40%. RAM means the loan book is Good RAM means the loan book is spread across many small segments, which can reduce risk compared to the reliance on very few large borrowers. Now, the risk profile, because in banking, loan quality is what determines the valuation of the stock. for the company. As of 31st December 2025, gross NPA, gross non-performing assets were 1.60 and net NPA, net non-performing assets were zero point 0.5 and provision coverage ratio PCR was 98.41. NPA means the bad loans that are not being repaid on the time. Gross NPA is the total bad loan. Net NPA is the bad loan after provision. Provisions are money set aside to absorb potential losses. Provision coverage ratio indicates how much protection that a bank has already been built. Higher is the generally better or safer for the investor or the bank. Net NPA of 0.15 and the PCR of 98.41 indicates very low stress and very strong protection for the bank of its value. This is the type of profile that can reduce the PSU discount. PSU discount refer to the lower valuation of PSU bank often received due to the perceived risk and structural constraints. When risk reduces, the discount can narrow. Now the profitability. Net profit for the quarter was 1,779 crore, up 26.51%. Operating profit was 2,736 crore. Net interest income was 3,422 crore. Net interest income means the interest earned on loans minus interest paid on deposit. The bank's core earning stream. Remember this. Cost to income improved to 37.19%. Cost to income means how much the bank spend to earn 100 rupees lower is the better. Now the quality metrics institutions track that, remember this and track this very carefully. Domestic NIM was 3.87%. NIM means net interest margin. NIM means the net interest margin, the bank core lending margin. Remember this. ROA was 1.86. ROA means the return on asset, profit generated per 100 rupees of asset. ROE was 23.79%. ROE means the return on equity, profit generated on shareholders' capital. The growth or the valuation mostly depend on ROA and ROE metrics. Now, capital strength. CRAR was 17.06 and CET1 was 13.10%. These are the measure of bank capital buffer. Higher is generally safer or better. The bank has also disclosed cumulative COVID provisions of 1,200 crore as of 31st December 2025, an additional buffer. And the bank approved an interim dividend of 10%, that is 1 per share, with a record date of 20 Jan 2026. Dividend means the company is distributing the part of its profit to shareholder. Now let's summarize the top down and bottom up logic in one sequence. Top down banking stocks typically perform when the credit demand is supportive, bad loans are controlled, and funding pressure does not rise sharply. Bottom up, Bank of Maharashtra become more investable after the OFS offer for sale by the government. Institutional ownership increases materially, and the bank is showing strong growth, strong profitability, and unnecessary tight asset quality metrics for the PSU bank. PSU means public sector undertaking government bank. That combination explains why FIs and DIs are buying Bank of Maharashtra right now. It is a practical investor filter for banking stocks, when to consider them and when to avoid them. You typically consider banking stocks when profit are improving, NPAs are stable or falling, and margins are not deteriorating sharply. You typically avoid banking stocks or banking sector when NPAs are being rising, deposit cost rise quickly, and squeezing margin, or the economy slows enough to increase credit stress in the economy. For Bank of Maharashtra specifically, track three things: quarter profit trend, NIM trend, net interest margin trend, and NPA, non-performing asset trend. Specifically, GNPA and NNPA, non-performing asset, net non-performing asset. If those remain stable or improves, the thesis remain intact. If they weakens, reassess early. If this help you understand the institutional interest in Bank of Maharashtra, please like the video, subscribe for the more data-driven stocks analysis, and share it with your investor friend who prefers number over noise. Now tell me in the comments, when you analyze a bank, what do you prioritize? First, profitability, margin, or asset quality? See you in the next video. Thank you.